Hello everyone, so this is Mark from Enigma Trading Group. This is going to be part two of our trading forecast, which we do every week, and we try to just look at where the market is headed, particularly gold. But eventually, I do intend on adding more. But for now, we're just going to stick with one pair, one currency pair slash metal per video. But yeah, so. Let's start off with what we talked about last week and the opportunities we caught from it and stuff like that. So first of all, last week I talked about very briefly. So if you guys want to see the full in-depth like breakdown of the week before, just go ahead and just watch the previous video. I'll link it down below. That way you guys can refer back to it. But I will be referring back to that video by posting like little videos and stuff like that in between this and stuff like that. Okay, so to start off with.
Okay, so while I was editing the video, I realized that a quarter of the entire video just was corrupted and it wasn't working, it just didn't move. I don't know what happened, I need to look into it, but for now, so what I'm doing while I'm before in the middle of editing, is I'll just record the 25% that's corrupted and then just cut back into the main video. Basically, the main bit that was corrupted really was the initial gold analysis. Sorry, the gold analysis for the one before the week prior. So let me just get to that now really quickly. Again, if you guys want to see the in-depth what's it called analysis, then watch the previous video that we posted. If you're okay with just having a quick rundown, then obviously stay in this video and then we'll just see what happens in the next week when it cuts back to the main video. But okay, so before it gets too long, what I was looking for last week was the continuation of this bearish run on the left here. Bearish run on the left here, as it broke 1890, broke below 1890, then huge spike to the downside, tried to climb back up, retraced to the upside, rejected this level, but what happened was loads of sellers tried to push it down, push back above, tapping those sellers out, but it did eventually finish back below 1890, so it was kind of clear that bears really want to hold that level at 1890. Then what happened was this level right here was this level of 1883 was being held quite well. Huge spike to the upside, and then market closed below it, and then that was the week finished. So I was expecting, as you can see here,
Right, a spike to the upside, breaking that, getting people on the wrong side of the market, and a continual bearish run to the downside, right? Down to 1872 first, that's our first take profit, and trying to get down to 1862. After that 1862 is broken, then we could potentially look even further down to 1850.
the
But
only
for now,
thing
I
that
think
was
so.
wrong about my analysis was it didn't retrace up.
Oh my god! Wow!
But overall, the move to the downside was clear. As I said on the video, we were expecting to hit 1872 first as a major resistance that was a daily band. And then pushing back down below 1862, and once 1862 was broken, we could expect price to continue down to 1850, which was the target. As you can see here, this is what the position looked like and was 1 to 7 risk to reward, not bad at all. And this wasn't in the video, but this was called on the Discord as well, expecting bearish sentiment to continue, and that's exactly what we call on the Discord. So just to not make the video too long, not make the explanation too long, level here, level breaking below this level, consolidation, a break past that consolidation, a retracement, retest, and a continuation down. This was not too much of a risk to reward banger, but it was still a 1 to 2.3 nonetheless, so better than nothing, I suppose. As I said as well, on the Discord, expecting price to reach 1800. That's exactly what happened. And then but yeah, so let's look at what I'm gonna say in the next video.
Then hopefully you guys got a better understanding. But yeah, so let's move on to next week and what's going to happen next week. So as just I did before, I'll do a time lapse of what of just analyzing everything, delete all of this, and then I'll get back to you guys.
Production. Yo, Vanessa got the sauce. Don't know if you get it, candy so thankful I am. And you were always with me when it hurts. I know that you don't understand. I don't wanna
Okay, so welcome back. So with gold, I can't lie, there's not a lot of data points to come off to explain gold and accurately predict what could potentially happen. So a lot of this will be intuition based and what I normally see and what I've seen in the market happen. So bear that in mind when I go through this. There isn't a lot of data points, mostly because we just had a huge push to the downside over here, so we're expecting to have some sort of consolidation before the next move up. So I'm going to take that into account when looking for opportunities throughout the week, and I'm probably going to stay away from gold for the first 2 days, and then maybe Wednesday or Thursday when I start looking at trading gold and potentially looking for the next leg to the upside. With that being said, I am looking for push to the upside at 1876, potentially 1920 as the next move for gold. This is because of current fundamental news around gold as well. So I know I've been taking shorts for gold in the short term, even though there's high interest rates and high uncertainty in the market. However, overall I was bullish. I was just looking for this leg to push down to 1800 before grab some orders and then start pushing up. Now we've reached 1800, and as you can see on the weekly, we have rejected that 1800 level, so maybe it's time to push to the upside, but I think we need to consolidate, build orders up, and then push for now, but we'll get into that when we get to there. Okay, first of all, 1800 psychological level use. For me, it's 1800 has been quite a psychological level for gold since I've been trading it, since it's been hitting it. Just loads of area where gold has been hitting that 1800 and actually reacting around that level. Obviously not this like recent, because obviously it's just been consolidating really, but looking back here, say 1800, 1800, 1800, huge level of resistance at one point. Obviously now that we're trading above it, we can use it as a huge level of support. It was once resistance, now it's support. There we go, got there in the end. Okay, as for the daily time frame, things we need to be looking for is a 1876 level. I'll also be marking that 1920 level up here. 1920 level up here as another level to look out for when looking for targets. As the thing we need to look out for in terms of the where gold could first go to before pushing up is that 1780 level, as you can see here, this wick. So if you look at the lower time frame on the daily, so on the daily time frame, what happened before the push to the upside for gold is we had some sort of consolidation here and then push up. So we can potentially see as a consolidation here and then push up. Exactly the same, just mirrored. That way we can build orders and then potentially so actually we'll get to it. We'll get to that later in the lower time frame. So looking at the 4 hour now. So 4 hour level, not much you can see here on the 4 hour, or really all that we can really use is this structure created on the interday time frame. However, I don't think that's going to be too useful currently. It is near a psychological level of 1860. However, overall, I think it's something that is just to bear in mind rather than to actually use. Okay, so 1 hour time frame, we're starting to get a bit more data points and things to look out for. So first of all, this 3-point trend line right here that we can use. So 1, 2, and a third touch here, touching 1780, potential bounce to the upside, and the second one is down here where these two wicks, two very impulsive or indecisive wicks slash candles are formed. What we can see here again is a third touch here, potentially touching 1780 and then rallying up. Looking at the 30-minute. So with a 30-minute, currently what we can see is potentially a consolidation, as I said, around here. Price dipping down to 1800, potentially slightly lower. Once it reaches here, what we can do is put our entries here, put stop loss below 1780, and then continue the rally up. Take TP1 at 1876 and the rest at 1920. And I think that would be the trade I'm looking for. Again, as I said, a lot of this is mostly intuition and just trying to predict what the market would do. Obviously, if something like this happens, where that happens, I could potentially look for the buys here. Again, that happens, look for the buy. But overall, I'm expecting price to potentially tap 1800, at least 1800 one more time, and then potentially just get close to 1780 before pushing up. So yeah, so that is everything when it comes to gold that I can see currently. I am, as I said, planning to increase the amount of instruments or pairs that I trade. That I forecast. Just for now, I think gold is a good baseline, a good starter, and then continue potentially work my way up to potentially doing pound yen, pound Aussie dollar, potentially even oil. But yeah, so I guess if you guys want any specific pairs that want to be forecasted, just let me know, and then I'll try to get them done by the end of the week and then post them. So yeah, I hope you guys enjoyed that.
Thank you everyone. Thank you very much for everyone who's watched through this video, and hopefully you guys have learned something, and hopefully you guys have taken notes and potentially use it in your own trading. If that has helped you guys, please hit that like button and subscribe so we can grow, reach more people, and help more people with their trading. If you guys have any questions at all, put it in the comment section. I'll try to answer them. But yeah, guys, that's what we're looking at for gold. Overall bullish momentum, bullish sentiment for gold, for myself anyways. But we'll have to wait and see. And yeah, can't wait to see you guys for the next week.